today's Docs Market Minute for Tuesday, November 3rd. I'm looking at these spiders here, and the reason I'm looking at the spiders ETF is because it shows gaps much better than the SPX, where it normally doesn't see the gaps on that index. Or we could look at our gap chart, which I'll show in just a minute now. Now, the thing I want to show you about here is that I'm always talking about the character of the market. The character of the market shows us what's going on. And a lot of times people are like, what on earth are you talking about? Notice today, now it's hard to see this because it's just one little candle, one little green candle today, but we gapped down this morning modestly. Oh, perhaps it was 6 or 7 points lower this morning. And then in the first hour, all it did was we gapped lower, and then all we did after the cash market opened was we just pressed higher. Very slowly, very patiently, relentlessly pushed higher to fill in the gap and then move higher from there. Now, this type of price action we have seen, this is to me what I call the Groundhog Day price action that we had for years and years and years. And this is typically what we see in these markets that come along here that are these quiet and trending markets that seemingly go on forever before we finally get a pullback, just when people stop looking for a pullback. But this type of price action where we have this overnight gap, a slow overnight gap, and then eventual buying pressure in the first hour is very, very common. And if we continue to see market action like this, then it's going to tell us what's happening here. It's going to tell us whether or not we're going to transition into new highs from here, or whether this is just going to fall into a lower high. So watch that carefully in the first hour. When the market stops doing that, when the market stops going through these transitions in the first hour, when it just goes lower like this, gaps down and keeps on going like that, that's going to be very important, because that will show a change in character, perhaps to a more corrective action. Now, the other thing I mentioned earlier on, I believe I mentioned this yesterday or last week, was all of these gaps. We have all of these gaps that have been left behind by this extraordinarily strong run. And over the course of the last year, we have not left any gaps. So if we start leaving gaps now, if we start breaking higher from here into new highs and ignore these gaps, so these windows left behind, then again, that's another huge clue that the market is undergoing a supply-demand imbalance and just doesn't care about that. So right now, what it's doing is, today, I think we got really close to filling this little gap that was left over here at the very tippy top of this move. Okay, just about everything else has been closed, but this was the only window left open. So somebody climbed all the way up here to shut this window. So now, if we do not see this come back down to close some of these windows, that's going to tell us something else about the character, that, again, very likely we're going to be moving into a quiet trending market that is going to be shifting above 2135 on the S&P and looking to close at 2200 by the end of the year. Again, guys, I don't have a dog in this fight. I don't care whether the price goes higher or lower. I don't have any particular feelings as to whether or not prices should be going higher or lower. There are many people out there that feel that prices should be going lower because the numbers are starting to get soft. But don't forget, there is absolutely no law that's out there that says that the economy has to have a correlation to the stock market. There can be external influences, such as the potential QE coming in from the ECB. We don't know what they're going to do, and so the market's always going to be looking 6 to 9 months forward of today's news. It doesn't care about what happens today. It cares about what it thinks will be happening 6 to 9 months from now. All right, guys, that is it for today's Market Minute. Thanks for listening. See you tomorrow.